housing market has been one of the hottest markets globally for the last 2 years. The staggering rise in prices has even outpaced the run-up to the crash of '08. But is this rally going to roll on this year, or should we brace ourselves for an impending burst of the bubble? Hey, and thanks for tuning in. Holly Shields here for Kalkine Media. Much of the credit for the excessive rise in housing prices can be attributed to the central bank's unprecedented monetary stimulus to support the battered economy. The US Fed had never pumped in more liquidity ever before, materializing into almost a 40-year high inflation. Record low interest rates, coupled with inventory shortages, have primarily driven the housing market into the last couple of years. But there's no doubt that the US Fed cannot keep printing money to support the economy. It has to stop somewhere. The year 2022 is one wherein the Fed will start to tighten its money supply and increase interest rates, making mortgage loans a bit more expensive. This will in turn drive speculative buyers from the market and cool off those soaring prices. A rising interest rate environment might not be able to reverse the trajectory of rising prices, at least this year, as it turns into a crash. However, it may slow down the pace of rising prices. The current growth of the housing market is not sustainable, but a total turnaround this year is unlikely. Mortgage loaner Fannie Mae predicts another 7.9% rise in housing prices from the fourth quarter of 2021 to the same time next year. Buyers who were forced to sit on the sidelines last year should not assume that the bubble will burst, turning the table in their favor. However, the red-hot markets of 2021 will likely cool down to a point where it's not so hot. Now that you're up to speed, check out some of our other videos to boost your financial IQ and stay up to date. This has been Holly Shields for Kalkine Media.